Hello, traders. Anyone out there ever feel like you messed up a good trade or could have made a good trade even better? Well, I did that this morning with Square. Now, you're looking at multiple time frames on Square. We got a 5-minute, a 15-minute, a 60, and a daily. I own 200 shares of Square with a cost of $73. That's the horizontal yellow line here. Friday, January 20th, I covered a $75 and a $76 strike call, and I turned around and I sold 77 strike calls for Jan 27th. I received 69 and 75 cents for those options, and I was happy with the trade. Well, if we look here on the daily, even the 60-minute time frame, Square has had a heck of a run, and it got up as high as 82.73 yesterday. And I'm thinking yesterday, just call me away. Just take my shares now. Well, this morning, Square gaps down. It runs a little bit, and it tanks for about an hour. It got down to a low of 74, call it 74.75, I think was the low of the day. Let's take a look at an option chain now. I want to direct your attention to the low price. This is the low price that these calls were traded at today. And I was watching the charts. Well, at one point, these $77 calls traded as low as 86 cents. And I was thinking when they were in the low 90s, I was thinking I should cover these. I should cover these, and I could sit tight and sell something for next week, even at a $78 strike. Well, I didn't cover them, and Square has just taken off. Square has ran from 74.70s today all the way up to 80.23. So, lesson learned. Will I apply the lesson next time? Well, we'll see. But let's say I could have covered these calls. Let's say I covered these calls somewhere around $1. You know, I'm losing just a little bit on them, but I could have turned around and went out to Feb 3rd expiration, or even I even could have held and sold Jan 27th expiration. You know, I could have rolled those up. I could have rolled those out to the 81 strike, even the 82 strike, which I would have gladly done. Or if I would have been inclined and wanted to have sold Feb 3 premium, I could be up in the 85, even 86 area, and probably done that, you know, for a nice little credit. But for now, I'm going to have to live with this trade the way it is. And I will say this, that on Jan 20th, when I sold those 77 strike calls, let's see, when was Jan 7th or Jan 20? Jan 20 would have been this bar here. I thought, you know, I would have been called away that day. I would have had to have sold at 75. I would have had to have sold the others at 76. So I'm thinking if I get called away around January 27th for $77, it's what? It's 3 points more on the stock, and I took in about $1.30 in options premium. But, you know, when the market hands you an opportunity like this, you know, I think a trader needs to take advantage. The thing of it is, who foresaw this move coming? Now, I did not see this happening, and I think that is the reason I held off. So, anyhow, I think the next time I would have done the buyback. I'm not so sure that I would have done the roll, but I thought even if I would have sold the 78s, because I believe the 78s around that time were around 2.25. You can see they traded for a low of the day of 198. So, you know, even the 78s would have been an extra point potential if called away next week. Anyway, you know, you live and you learn. I tried to trade in the moment, trade with the information I have at the time. So, hey, if this content is good, I would really appreciate it if you'd like the video. Consider subscribing to the channel. It would help me out a lot, and I would appreciate it. Until next time, this is Jeff. See you in the next video.